Yeah, I know. It's been about 60 days since my last video. What can I say? In the field virtually every day, doing deals, getting distressed property, trying to grow the business because this is the best time right now to be doing the stuff that I'm actually doing. So let's get into it. So, welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Randy Patrick here, putting the realism back in real estate. Glad to be back on YouTube here. I'm actually going to try to do a bunch of videos over the course of November. You know, sometimes they have that November mustache thing, Movember. Well, I'm going to call this Video-vember or Foreclosure-vember. So I'm going to try to do at least a video every day, or at least get 30 videos in the month of November. Reason being, there's so much on the go. So many things are happening. Housing market's kind of whacked out. We're in a rate lock situation. We've got low inventory. Price points are still kind of rising. There's a lot of stuff happening here, and people aren't very happy. But this really is the proverbial calm before the storm. So anyway, let's get into it right now. So my first discussion video in the past couple months is going to be about, guess what, our friends at Case Shiller. But first of all, if you happen to be in the Tampa Bay area, I'm actually hosting a launch party for a new brokerage firm. I'm a real estate broker, investor, licensed real estate broker, the whole bit. I'm opening a second brokerage firm at an office I work out of. It's called the Real Freedom Collab here in Tampa. So it's the Real Freedom Realty launch party. So we're actually going to be hosted by the guy who owns the building and the operation, Brandon. There's Dolmar Cross. Dolmar is actually star of A&E's Zombie House Flipping in Tampa. One of my deals was on that show. Steve Morales, who's also here, is a great closer at the collab here, and me, I'm the special guest speaker, okay? We're going to talk about all the cool things that we're doing here and the reasons why you should be looking at distressed properties and some of the deals we've closed recently. So anyway, you're welcome. Doesn't cost. There's the, I guess you could say, there's the link if you want to go to Eventbrite and look for a Real Freedom launch party. Tickets are free. We're going to have a little discussion. It's really a networking launch party. Drinks, appetizers, the whole bit should be a good time. All right. There you go, guys. So please, everyone's welcome to attend. Just go to Eventbrite and RSVP. All right? Sounds good. Okay, guys. So, yes, CoreLogic. So October 31st, Halloween, was the last Tuesday in the month of October. So the last Tuesday of the month means Case Shiller, S&P CoreLogic, Case Shiller Home Price Index is released for the month of August. All right, so again, Case Shiller runs a couple months in behind, unlike National Association of Realtors, where they run pretty much the next month as far as their data is concerned. Case Shiller is a little more of an intense algorithm and calculation, and it's going to take a look at things a little differently. And it's just again, it's a different way of looking at things, but this is kind of our standard for home price appreciation, depreciation, whatever. So ultimately, there's still a trend upward. Don't forget August. Okay, is July, August is kind of your summer selling months, so a lot of deals are closing there. So you'd expect, even though we're having slow real estate time and seasons, you'd expect a little more activity in the months of July and August. So ultimately, in the end, it went up a little bit. So the year over year went up 2.6 annual change for August compared to the year before, up 1% from the previous month. All right, so we'll take a look at that. Interesting in a way that some of these locations that have had negative growth or some bad real estate for the past decade or so are starting to lead the charge because there is some slight recovery, but they're coming from a place pretty far down to recover. So anything that's happening in these markets may look a little better than it really is. But again, CoreLogic is going to report on the pure numbers. So home prices continue to rise in August 2023. National rose by 0.4% in August, marks the seventh consecutive month gain since it bottomed in January 2023. All right. The measure of the strength of the housing market is the relationship of current prices to their historic levels. Worth noting that national composite 7 cities, Atlanta, Boston, Charlotte, Chicago, Detroit, Miami, and New York, stand at their all-time highs. There were price increases on 19 to 20 cities on a seasonally adjusted basis. Only Cleveland missed the marker. Okay, simple as that. So regional differences are substantial. Year-over-year basis, the 3 best performed metropolitan areas in August were Chicago, New York, and Detroit. Chicago has topped the leaderboard for 4 consecutive months. New York has moved up this month from the silver medal position. The bottom of the ranking is still West Coast, of course, with the worst performances coming from Las Vegas, Phoenix, Midwest continues the nation's strongest region, followed by the Northeast, the West, and the Southeast, where the Southwest is the weakest. So again, year-to-date basis, the national composite has risen 5.8%. So what's going to happen? The mainstream media, people, they're all going to say, hey, there's not an issue with housing, everything's great. Look, we're still seeing some property appreciation. Yeah, this is the funny calm before the storm. You will still see property appreciation. We have almost 8% interest rates. We have low inventory. We have a lot of headwinds on home price growth. We have more and more MLS listings. I see every day price reductions, people taking their properties off the MLS. So it's a bit of a mess out there. So it's really kind of a conundrum. And it's unusual when you see the issues that are happening out there. It's almost like you were at a point of two extremes. Oh, this shows us price point increases, so the market must be good, but it's not good for buyers, because guess what? You don't want to pay pay with an 8% mortgage with rising prices. Okay, so that's problematic in the industry. The selection's not there. The opportunities aren't there like they used to be. It's even tighter than it was before. So something's got to change. Now, the Fed may not be raising rates anymore, but they certainly aren't going to be decreasing them anytime soon. So we're kind of in this holding pattern. I've mentioned it before, ice age, rate lock, the whole bit. It really is. We're kind of stuck. So what do? You need to look at other alternatives for doing real estate. So obviously you can see the chart below just shows how the indices have been gaining and losing value. Obviously, the middle part shows the big gain 2006. Obviously, 2012 is the trough. We see a little bit up and down here. COVID back up, exponential, coming down hard. A little bit of slight recovery as well too. So it's all over the place. The housing market is hard to understand and hard to read. I'll be quite honest with you, I get that, but when you start looking down from the macro to the micro level, you see a lot of nuances and things that are going on, which still indicates that we're going to have problems as we go forward. Should they have happened already? Yes, they should have, but please understand the market is manipulated. For those of you who don't agree with me on this, take another look at this. The market's been manipulated since the last housing crisis. That's how we recovered. That's how we had the big spike of almost 40% since COVID. That's where we are today. Things will fall dramatically as we go forward. So again, the indices show us back in 2006 where the peak was. It shows us where 2012, the trough, shows us the pretty much exponential growth to where we were in 2021. Little dip in 2022, 23, and we've popped back up here. That's the sort of history of the core of the Shiller indices right now. This is the sort of bar chart that shows that July 2006, we were peaking back in the last housing peak. The trough was Feb 2012, and where we are now. So the current, we are almost 69%. So we've gained 68.7% value, equity, whatever you want to call it, from the previous 2006 peak. And we're up about 132.5% from the 2012 trough. So if anybody bought in that 11-12 time frame, you've more than doubled your money and your equity. On a national basis here, it may differ region to region. I know in some locations you could be up couple 100% for all I know. Okay, so it depends on where you are. But nationally, we're on 132% increase. So that's pretty good if you bought a property back then, all right? So keep that in mind. So anyway, guys, you know what I always talk about here. Haven't been on the video for quite some time, but if you appreciate the information that I provide, if you could hit that subscribe button and the bell notification, I'd really appreciate that. Thank you very much. Helps my channel grow. I'm going to push hard now because you know what? I've been status quo for the longest time with the powers that be here at the media that we're working on here. So I'm going to push the envelope to see if we can do some new things and some fun things, maybe increase viewership and subscribership. Maybe they'll change their mind on keeping this channel down. All right. So anyway, here we go. So if you want to look at the city-by-city deals here, Atlanta up 3.4%, Boston 3.1%, Charlotte 3%, Chicago leads the way with 5%, Cleveland 3.9%, Dallas was negative 1.7%, Denver negative 0.6%, Detroit 4.8% increase, Vegas 4.9% negative, LA 3.2% increase, Miami 3.3%. We're looking at Minneapolis 1.9%, New York 5%, Phoenix lost 3.9%, Portland lost 1.5%, San Diego up 4.1%, San Fran down 2.5%, Seattle down 1.5%, and Tampa basically is the same at 0%, and Washington up 3.4%. Now remember here, if we go back about a year ago, 18 months ago, these percent year-over-year changes were in double digits for every city on the 20-city composite index, and we had locations like Phoenix, 30%, Tampa 30+%, Miami 30+%. So even though we're seeing some modest increases, just remember, things have slowed down dramatically from what it was a year ago, 18 months ago. So this is what's happening in the marketplace right now. But still realize that you've got about what 1, 2, 3, 4, 5, 6, 7 locations of the top 20 we're still losing. Tampa didn't lose, so they remain status quo, and the remainder had a bit of growth here. But again, we're talking 2% to top of 5%. It's not earth-shattering, not the double digits, but it's still something. But as I say, everything with a grain of salt. Temper your expectations because we've come off the summer selling season where you would expect a lot of sales activity and anything that's going to hit. Now, as we roll into the fall, there's a few things that happen. People slow down. People pull housing off the market. Way more foreclosure activity appears, and that's growing as well too. So things could change as time goes on. And again, case Shiller runs a couple months behind the data, so we know pending sales are down. We know listings are down the whole bit. So we are not out of the woods yet. I believe the worst is yet to come here with respect to this stuff. All right, simple as that. So anyway, we talk about this all the time. So people who engage with me, what am I doing? All the things I talk about here, we are doing in the marketplace right now, whether as investors, as real estate agents or brokers, etc. Looking at foreclosure auctions, bank-owned REOs, short sales, short payoffs, taking property subject to, looking at homeowner association and condo association foreclosures, tax deed foreclosures, looking at probates and estate foreclosures, the zombie houses, tons of zombie houses out there, blue tarps all over the place these days, underinsured. What does that mean? Well, guess what? Maybe you had a hurricane or a fire or a tornado or something went through your region or a flood, and you were underinsured, and basically you're not getting your property repaired, you're underwater, the whole bit. So that's where we can come in and help. Surplus overage, that basically is after the auctions, if there's a surplus there, it's entitled to the homeowner. And one thing that's new that I've worked on now that we're adding is something called novations. I'm not going to talk about it here, but novations, we'll just call it a more elegant and creative way to wholesale buy and sell property. So we're doing that as well too. So these are the things that we do in our business. So whether you're an agent, a home buyer, an investor, whatever, this is where you should be looking, because these areas are where you're going to find distressed deals. Not every distressed deal is a nasty house, etc. A lot of them are, but that's where value is. If you know what you're doing, you work down the price points and you've got yourself some equity. So that's what's going on in my neck of the woods down here. By the way, gethousingdata.com, that's gethousingdata.com. Everyone should be checking this site out. It's a free 7-day trial. Why? Because this shows you and tells you who's facing foreclosure, who's going to auction, who's going to tax deed sale. Critical information is on this site that's going to help you identify the opportunities in the marketplace. So please keep that in mind, gethousingdata.com. Now, I don't want this video to be all commercials, but I haven't talked to you in about 60 days, as I said. Let's get back on track. This is what's happening right now in the marketplace. We're doing stuff every day. And once again, you're invited to the Real Freedom Realty. I'm the broker. I'm the special guest speaker here. It's going to be a lot of fun. It's kind of a little joke we're playing here. But all these people on the panel I've worked with, I've done deals with, and as I said, even with Dolmar, who's the star of the A&E housing, zombie house flipping here in Tampa. One of my deals, as you know, I've mentioned before, appeared on the TV show, and we're trying to do more with him. So a lot of stuff happening here. It's good fun. There's the Eventbrite. Please check it out if you want to. Just register and show up and meet, discuss, hang out, do whatever you want. Drinks and appetizers will be served. All right, guys. So once again, thank you for the views. Thank you for the likes. Thank you for the comments. If you're not a subscriber, please do me the honor and subscribe. And I'll be doing more videos. Every day I check the news wires. There's multiple articles every day about the housing industry, from mortgage rates to what's happening with NAR and real estate commissions, to new house stuff, to foreclosures, to real estate gurus and pundits and economists talking about where the market's going to go, to all sorts of neat things happening. So I'm going to be hitting more of those, doing more of these videos over the course of the month. Some of them might be full videos like this. Some of them could be YouTube shorts, whatever that may be. I'm going to start to put a lot more effort into this because so much has happened. We are at the cusp of some really cool things that are going to occur in the next little while. You should be aware of what's happening. Mainstream media doesn't tell you what's going on really behind the scenes. You need to be aware so you can make the best real estate decisions, whether you're a home buyer, real estate agent or broker, mortgage professional, title professional, or just a plain home buyer that wants to get a good deal on a property. doesn't want to pay exorbitant prices. So anyway, guys, look forward to speaking with you soon. Take care. More videos coming your way very shortly.